I'm in my mid 40s at the moment, and I haven't been able to figure out or understand the game of stocks. And I'm sure that goes with many, many people
Yes,
around.
yes,
It doesn't come natural understanding stocks and gold and what have you.
yes,
So, I mean, a lot of people can understand property, and that too is hard for many people. Now, in the absence of our urge or desire to educate ourselves, we are easily the victims of financial advisors,
yes.
right? Are you in favor of just handing the money to the financial advisors
No.
in the hope of just letting them and hoping that some sort of return will come back? Because I've heard many bad stories.
Yes.
Many people have complained that they've lost this and that, and then they are not able to recover anything.
Yes. The problem is there are two kind of problems here. One is the investment advisor itself, that is because you're going to a big bank. I won't name the name here, but you will go to the big bank. Their investment advisor will come. They will tell, okay, these funds are good. See the past performance. They will do very well for you in coming years. But later on, you will find, okay, you're just standing at the same place which you started 5 years back because of so many things like fees and so many other things. Then there are other problems which is related to your, let's say, insurance industry, which is combining together your health insurance or life insurance to your wealth as well, which is a deadly combination. You should not be doing that. So if somebody is telling you to invest in a fund which is giving you health insurance or life insurance along with your management of the wealth, it is a suicidal journey you're going towards. Because what will happen, whatever I tell, whatever I have seen in past 6 years of my content creation journey on personal finance, I've seen that this is, by the way, proven fact as well. You should keep your life insurance and wealth, let's say, growth separately, completely separately. Even if somebody tells you, okay, just buy this insurance and you will get some kind of returns on that as well. Otherwise, it's just money going down the drain if you're investing in your life insurance. The thing is, you should be ready to pay that term life insurance plan, whatever the amount is.
Separately, I mean,
Yes,
keep it separate.
keep it separate.
Yeah.
This is and people realize this after 3 years, 4 years, once they find out, okay, I'm paying this much of premium, how much I'm getting? Nothing. It's nothing going to be there. And you cannot, by the way, take it away as well. Like you cannot redeem it as
until
well.
the maturity or your death.
Exactly.
Yeah.
It's very simple. Going into stocks is very, very simple. But this simple thing for me as well, it took me decades to understand.
Not everyone is interested in this. I mean, the problem is that, I'm giving my own example. I haven't been able to crack my interest into the stocks, and I don't want to rely on the financial advisors either. Imagine myself talking to a financial advisor, handing my money to, to the
you don't
individual.
have to. You don't have to. Basically, what happens is, see, you do not have to go into individual stocks. Because let's take an example of a company like Blackberry, which was a pinnacle of smartphones until 2010-11. But then what happened after that? Let's take another example of Nokia. What happened to that company? Let's take an example of Intel. What happened to that company now that Nvidia is there? Even these companies which are currently on top, like let's say Apple, let's say Nvidia, you don't know what will happen in 5 years. So you cannot invest in these companies, these big names. If you are investing just because of the sexiness of their names, you're going to not get to that level anytime in future as well. Very few people got really good money investing in companies like Tesla or such big names.
Right.
What you need to do is basically look into ETFs, which are exchange traded funds, and invest in one particular. I know people who are investing in one single ETF, their entire net worth, millions of dollars invested in one single ETF, which is either the US S&P 500 index or the world index. So if you're not really sure about the US, then invest in the world ETF. This world ETF will give you an exposure to over, let's say, 4,000 companies in the world, top 4,000 companies in the world. So tomorrow, Apple goes busted and it has gone, hypothetically speaking, just gone zero. You don't have to worry about that because some other companies from that 4,000 will come up and make up to that fund. So that fund would be investing in all the companies in the world. Of course, the returns would be less than, of course, a company like Tesla, but you will have less volatility and your faith on stock market will be restored.